want to read a comment on my YouTube channel recently. It said, "Hey, Chad and real estate investors, please stop fanning the flame of get rich with real estate. Investors are the cause of the housing problem. We would be better off without all of you."
Real estate investors are not causing the housing crisis. They are simply scapegoats for doom creators and crash bros who frankly don't own any real estate, and all they do is produce porn, fear porn.
Are real estate investors the cause of the housing problem, or are we actually a net good? Are we doing some good in the community? What's your take?
Well, I think if we're going to have this conversation and really make it soup to nuts, let's actually up level a conversation, because I think if you're going to say investors and we're going to have an honest conversation with ourselves, I think we should actually have 2 or 3 camps of investors, because that's where this gets more interesting. And if I'm thinking about this just off the cuff, tier 1, let's call it Wall Street. Let's call it big money. These were the players that for much of the last 1,000 years never looked at residential real estate, only started to look at residential real estate after the Great Recession. So that's category 1, which we should talk about because it's its own answer. It's its own thing. Then there is level 2. There are the real estate investors who come in for a quick buck. They're looking to take advantage of this or that. And they're really, they're not in it to provide a service. They're in it for the money. And then there's 3, where I put one rental at a time, and I put small and mighty investors. You can call us real estate investors, but really what we are is service providers, right? Not everybody can own a home, but everybody needs shelter. In addition, one of the things that I know about your community and my community is we typically do great deals. And in order to do that in the environment in today, we have got to buy some rough properties, and there's got to be a lot of value add. And I have plenty of stories to talk about how we're actually saving real estate from being flattened or scraped and just having a lot there. So I think we need to talk about all 3 of those kind of investors, because I don't think there is a one-stop answer to that.
100%. Well, let's go there. Like, I know you, one of the reasons I love following your channel, and you have the morning, you talk about the economy every day. You also talk about real estate, but you understand kind of the big picture scope of the economy. And I'm curious if you know any stats off the top of your head, or just rough stats about how does that break down? Like in all the people who own property in the United States, how many of them are investors? And out of all the investors, how many of those are in each of those categories? Do you have a rough idea of that?
Yeah, absolutely. So rough and tough, when you look at residential real estate, there's about 63 to 64% of real estate is called owner occupied. So the simple math says, let's just do easy math and say 35% is owned by investors or their second homes, right? That's the highest level. Now, when you step inside the investor community, which again, for this example, we're saying it's 35% of all housing. A lot of people have fixated on Wall Street, right? Tier 1 in my earlier example. And there's been a lot of people that have misquoted some crash bros, and they say the following statement: 40% of all homes are owned by Wall Street. That is flat out and categorically incorrect, false, and a complete lie. Wall Street, deep pockets, defined as people that got 10,000 units or more, today, as of right now, is somewhere between 1 and 2% of the market. That's it. Yeah. Now, it's fair to say 15 years ago, that was 0, right? They weren't even in the game. But they're sub 2% today. So to be all mad and angry and think that Wall Street, which again, plenty of crash bros are trying to fire up their community and say Wall Street owns 40% of all housing. It's just a categorical lie, misreputation to get a feeling. But again, 2% where it used to be 0, true, valid, fact. The other thing to point out with Wall Street, again, because I look at this every day, is Wall Street has gone through an evolution. After the Great Recession, and again, I was a buyer in this environment, so I remember the day this happened in my market. So let me paint you a picture of what was happening in 2009, 2010. Every Monday in my market, there would be a new, they called it a new tape loaded with a list of new foreclosures. bank-owned properties. And what I was doing every Monday was combing through the list and trying to find the good deals and writing offers and trying to get something in contract by Friday. It was just this process that seemingly went on every week. And then one Monday, nothing showed up. Then the second Monday, nothing showed up. So I called all the contacts I had, which I had for years, and I said, what the heck is going on? And they said, Michael, you're not going to believe this. Some Wall Street big money fund bought the entire tape. Not only did they buy the entire tape, but they bought the entire tape at list price.
Wow.
And the reason this was working for me is the tape would be loaded Monday. I would write offers. And I learned that the banks would accept, I think it was 19% below list, but they wouldn't accept 20. So I was just running that game as fast as I can, trying to get properties at a discount. But Wall Street came in and bought the tape, bought everything, and bought it at list price, and the market changed forever. So that's what Wall Street was doing. So what were they buying? They were buying everything. So they didn't have a buy box, right? They bought all qualities in all sizes in all areas. And if you fast forward 5 years, what Wall Street realized, maybe it was 7 years, is buying old product is not very efficient.
Yep.
Because they bought everything and they had no economies of scale and none of these things. So what Wall Street has done and is inside their 1 to 2% is now they're doing build for rent. But here's the problem. What they're doing now is they are building single family home communities to rent on purpose from day one. So, these 100 home communities were never, ever, 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 ever intended to be owner occupied. They're essentially horizontal apartments versus vertical apartments. But still, they count as single-family homes. So I think Wall Street is being, at least in this case, targeted by doom creators and crash bros who don't know what they're talking about. I think there is no problem with Wall Street saying, I think the best use of capital is to go buy this 10 acres, and then I'm going to pay some builder like Lennar to build 150 homes, and I'm going to rent them from day one. That housing stock was never meant to be owner-occupied.
And plus,
so that's kind of
you're adding to the stock as well.
Yeah.
So in that case, you're actually building supply, and so you're not taking it from the existing supply. So again,
exactly,
a lot more nuance than the headline might lead you to think.
Yeah. So I think I think Wall Street, on the margin might be a slight positive because of that. Because again, if they're putting in new single family homes for rentals, and they're always supposed to be rentals, that is taking demand away from others that maybe will go owner occupied, right? So it's a net positive. And again, as somebody who owns apartments and houses, it is the majority of people's goals to get out of apartments into homes. So if we have more rental homes, rents should go down, which is a net positive for consumers.
Yep. So we've got this Wall Street 1 to 2% of the total housing stock, but then we also have these other categories that we talked about, including small, mighty investors, one rental at a time type folks, the mom and pop investors. How does that compare to the ownership percentage to like the Wall Street folks?
So it's estimated that about 65 to 70% are mom and pop landlords owning 10 units or less. Right? It ranges between 65 and 70%. A lot of these folks are what you and I would call accidental landlords. They bought a home, lived in it for a decade, didn't sell it, kept it as a rental. Maybe they have one or two. Maybe they house hack, which is very popular. And again, I think a cheat code to wealth. So about 60 to 65% of rentals are owned by mom and pop, 10 units or less. And these are these are the guys who don't raise rents. These are the guys that, typically, have relationships. They typically self-manage. I don't know if you know this. I think it's 82%, according to Hemlane. 82% of mom and pop landlords self-manage, which means there's a relationship between the owner and the renter. So mom and pop landlords are absolutely not the cause of the housing crash. They're just, they're buying one every 2 years, one every 3 years.
And if I got these numbers right, Michael, out of the total properties in the United States, you said like 65% or so owner occupied.
Correct.
So the other 35% are landlords of some kind, and then out of
Correct.
those, that other, third or so of ownership, 2/3 of them are mom and pop. So like a pretty big chunk, like pretty
Oh,
big chunk of the overall investor stock into the overall housing stock are small
correct.
investors, right?
Absolutely. Yep.
Yeah. So what I think is interesting about that, first of all, that whole big investor versus small investor, like the actual investors who really move the needle are these small mom and pop investors. Your next door neighbor, the millionaire next door, the person who, is buying a property or two for retirement. Like those are the people driving it. So that's one conversation. The other conversation I want to get into a little bit is, what is the source of the news of that there is a crisis? Like, so I hear a lot, and I think this is a real phenomenon, is that people are trying to get into the market. They're trying to buy a home, their first home, and they're just feeling like, I'm getting out competed. I can't buy this first time home, but there's not enough supply of housing. So I'm wondering, can we just talk about that dynamic a little bit of like, where is the source of that kind of angst and that newsworthy story coming from? And then maybe we can circle
Yeah.
back to like how investors are related to all that.
So you have just pointed at the biggest thing, the elephant in the room, if you will. So it's multi-layered, as you might suspect. So the first thing I think we should appreciate if we're going to have an adult conversation is the fact that the Fed broke the housing market. And unfortunately, I think they broke the housing market for a decade. All right, great. What the heck does broke the housing market mean? Well, it basically meant they kept interest rates too low for too long, the better part of 2 years. And, we have, I don't know what the latest number is, call it 80% of mortgages below 4%. And what that just means is those people with those interest rates are not incentivized to trade up. If you understand the housing market, and I've studied it for the better part of 30 years, the lion's share of the housing market, right? 6.6 million existing home sales we had not too long ago. They were move-up buyers. The move-up buyer, what people don't realize, is a two-step function. They are a seller and a buyer, which means there's two transactions. And by the Fed creating artificial rates for too long, we had all these people buy, but also all these people refi into lifetime low interest rates where they have no incentive to sell. So the housing market will be broken for decades. For 40 years, we have had a housing market where the average person stayed in their home for 8 years and then they moved. That is already up to 10 years.
Wow.
And it's probably going to 14 or 16 years. The housing market will remain broken for a decade, below trend transactions, because the motivated or the move-up buyer is simply not participating at scale. Now, that's step one. What does that mean? And why do we have a problem today? And why is everybody right? We have a crisis today. The fact that the move-up buyer is on strike means that step one of the function is not operating. And what is step one? It means they sell the entry-level home. The entry-level home is flat out not being built by builders. We have had decades where their average size was 2,300 square feet or larger. We haven't had a focused effort on entry-level housing since the 70s. And we are paying that price. And then you add on top of that the Fed breaking housing, and you just don't have entry-level units. In most of the country, if you take the median price, let's call it 400, entry-level housing should be between 2 and 250. That stuff's non-existent. No wonder first-time home buyers are record low. This is a disgusting stat. National Association of Realtors, go look it up yourself, last month reported that first-time home buyers are a record low 24% of the market. They're historically 40% of the market.
Wow.
That is disgusting. And that's because the move-up buyer is not playing. They're frozen in place and will be for a decade. It just sucks.
So it was hard to get my head around. And I think this is maybe part of the challenge of like putting blame or making a very complex issue into a very simple one, is that you mentioned a number like 6.5 million transactions a year, something like that.
Yep.
And, but lately I mean, hasn't it gone down by like an enormous amount? Like
Yeah.
the amount of volume is what now compared to what it used to be?
So 2024, it just finished. We just got the number 4.06 million. So
Okay,
it's down, what's that, 40%, something like that?
40%.
35?
So anytime in any way of measuring the economy, if something goes down by 40, 50%, you're talking about like a crash, right? That's an
depression level.
enormous change. And so the elephant in the room is what you said is this change in how the stickiness of the housing, like people are not fluidly moving up into the housing. They're not selling their housing. That you have to look at the main cause. And like, so I love the fact that you sort of put numbers around a concept of, all right, low interest rates, lock-in buyer, people stick around. What does that do to the economy? Record low levels of inventory. And you can have all the investors in the world buying up properties, but you can't touch like 2 million less transactions per year, 2.5 million less transactions per year. It's not even close, right? I mean, the amount of investor buyers is not even close to that kind of number that's really taking housing off the market.
Yeah, I mean, we can go back again. All this data is public, folks. I just read it all the time. So the same report that talked about first-time home buyers being 24%, where it used to be 40, investors, exactly the folks we are talking about today, 25%. You know what we have been historically? 24%. Now you got to remember, we went from 6.6 where we were 24% of the market. Now we're doing 4 million and we're 25% of the market. We're not playing either, right? It's hard to make deals happen. That's mom and pop investors. We do not lose money. We do not buy negative cash flow. We do not gamble. It is nasty out there. It is unaffordable. The inventory choices at the low end are scarce. And, you know, it's tough.
So I like this. We've started with number one. The big elephant in the room was low interest rates, lock-in buyers. Are there other factors too? Like I actually heard an interview with Mark Andreessen, who's one of the, a tech founder. And it was a long form interview, but he got into housing. Actually, I was like, oh, this is interesting. And he was talking about one of the issues with certain markets like real estate is that you have subsidized demand, and then the whole mortgage market is subsidized by the federal government, and then you have artificially limited supply. And so if you have artificial like subsidies or restraints on both sides, he was just talking about why do certain markets go up in price at large amounts over time, right? Are they a little bit, and that was that's kind of a nerdy way of saying like there's some constraints on the market even beyond this interest rate stuff we're talking about that make supply limited and demand, subsidized. Are there any other things you would add to just the overall housing problem that we're talking about here?
Yeah, so I know Mark Andreessen. I met my company I was working at, HP, bought his company, Opsware, back in the day. So I know Mark. He's a really smart guy, very well-versed, reads everything. And he's absolutely right. If you're working in any market where demand is incentivized and supply is constrained, that's ass backwards.
Yeah.
And, he was very likely talking about California, right? It's very expensive to build here. You can't break ground for less than $500,000. And that's why you have some appreciation markets and you have some cash flow markets, and you have some places like Texas. It's easy to build. In California, it's not. And you kind of get what you expect. And at the end of the day, supply and demand is undefeated. So if you're goosing demand and you're restricting supply, prices go up. It's not magic.
Yeah. So I like to just mention that you have a good economics lens, but when people are asking me, should I get in the market? What's the long-term benefit of real estate? My point is like, well, do you see anytime soon the fact that zoning and land regulations restrict supply changing? Like, I don't see that changing, not in California anytime soon. Maybe the fires wake some people up. I don't know, but who knows? And I also don't see like the subsidy of mortgages. The fact that we have 30-year mortgages, the fact that we have FHA loans at 3.5% down,
30-year mortgages.
Yeah. Like if you travel around the world, you go to Canada, they don't have that. Europe might have some here and there, but like most places do not have this. So we have this very, very friendly policy on the demand side on mortgages, which we investors take advantage of. So here we go. But it is going to cause your real estate market to go up in value over time. And if you add that to a good economy, places where people want to live, big metro areas, like that's the whole thesis. Like buy in places like that, make it cash flow today, hold on for the next 10 to 15 years. That I don't know. You have anything to add to that overall real estate strategy?
I'll give you one step even above that. I think at the end of the day, if people really step back and look at what's happened to our economy the last 5 or 6 years, I think we now have evidence it's hard to ignore. Inflation is a feature, not a bug. I'll say that again. Inflation is a feature, not a bug. We have, what is it, $36-38 trillion in debt. What the system requires is that we pay off that debt with cheaper dollars, aka inflation. So don't hate the player, hate the game. And if you can work in an environment where you could buy an asset with 30-year money, fixed 30-year money, cash flows day one, and you are having somebody else pay off that mortgage over time, and you get to keep all the upside, right? Because again, you're getting into this levered asset with 20 or 25% down. There is no better game in town. You and I had a conversation the other day that we should put here. If you have a high income, your real estate investing journey should be simple. Don't overcomplicate it. Inflation's a feature, not a bug. Go get yours. It's about owning assets that cash flow for a decade. It's that simple.
Yeah. And I think we also added, and I will put a link to that conversation on your channel because that was one of my favorites we've had in a while. The other thing is, as interest rates fluctuate, one of the entry kind of keys maybe is like you put 20% down 10 years ago, but maybe today you have to put 30 or 40% down in some cases. I'm not saying that's always the most advantageous thing to do, but like but the point I'm hearing you say is like the long game is the point. Like if you're going to have inflation, which we all pretty think structurally is kind of built into this economy, you buy in a location where people want to live, where population is growing. You lock in a 30-year rate. You put whatever down amount of money you have to put down in order to have a positive cash flow, and then you just hold on in a good location.
Just wait.
That's a recipe. Like that hasn't changed. Like that's still a good recipe.
I don't know why people always want to be the hare. The tortoise wins the race.
Yeah.
You want less stress, more money, more wealth. Be the tortoise. Stop being attracted to the hare. They come out hot and they all blow up.
Flipping houses, burst strategies. I mean, those are cool, right? But it's like the boring 20 to 30% down single family house and hold it for 10 to 15 years. Like that is winning the race. Like it's still winning.
Amen. I would do it no different. I would do it all over again the same way. And I know a lot. I could do lots of things. I wouldn't do anything different.
So that's a good tangent. We're talking the investing strategy, but I do want to circle back. So part of what I really wanted to pick your brain on, Michael, was like just understanding some of the stuff you're explaining about the overall economy, what's actually causing the housing crisis. We kind of got a clue here about interest rates. We've got a clue about demand and supply, have these structural issues. But I also want to go to kind of the soul of what investors do. I mentioned earlier that I'm just worried that some people get into this game and they're like, you kind of feel like you have to hold your nose, like, oh, well, I'm making money for myself in my retirement, but I'm not helping people. So I want to, you've been a landlord now for over 20 years. Mm-hmm. You've experienced, providing housing. Let's just talk about the rental market itself, because the fact is renters need a home to live in, right? So can you talk about, first of all, from a national standpoint, like what percentage of people rent compared to own? And then also, why would they do that? And then we could talk about maybe some personal stories we've had of people we rent to and why it's a good thing.
Yeah. So this is probably the crux of the difference between Wall Street and mom and pop investors. Mom and pop investors are focused on providing a service. And I don't know if the people realize this, but there's a whole Section 8 program. There's a lot of veterans, people on fixed income that frankly, if they didn't have these rental units, they'd be living in their car. I mean, it gets to that point because they need the assistance. They need a safe place. They need a place that's not falling down. And there's plenty of slumlords out there, but that's typically not mom and pop. Mom and pop care about it. It was their home, and they care about their tenants, and they want them to be safe, and they do the repairs. So being a landlord the right way, which is most mom and pop landlords, is not about maximizing the dollars. It's about long-term ownership and keeping the tenant happy. We don't want turnover, right? Turnover is what kills landlords. So that's why you would typically see mom and pop landlords with rent below market. It's why you would typically see a level of friendship between owner and tenants, because that's just what works. And, as somebody who has had his portfolio 50% or more Section 8, I can tell you all kinds of stories, single parents, abusive situations, all of the, people who are on pensions who have fixed incomes getting assistance in housing. It's a great thing to supply housing. So mom and pop landlords provide a service. Shelter is required, right? Other than food and water, shelter is next. So mom and pop landlords provide a required service. And if there weren't mom and pop landlords, residential real estate would quickly fall apart, right? If you look at all the properties I have bought, and there's plenty of videos on my channel, I'm buying properties from slumlords, and I'm spending between $30,000 and $50,000 making a pride of ownership rentals, and then I'm putting in a happy tenant that'll hopefully stay there forever, right? So we're saving. I have bought properties that were red tagged to be destroyed, and I've gone in and bought them for a great price, but then spent big money saving a unit, and now it's in production versus being torn down. So I think a lot of people are just upset. It is unaffordable. It is a crisis. There are lots of bad things, but you're pointing at the wrong people. It's not mom and pop.
Yeah. Yeah, I think the stories are important. When I had this YouTube comment that kind of started it all for me, I reposted it, and I had one of my favorite comments that I pinned was by just a random person who said, I actually am thankful that my landlord had a property in the neighborhood I lived in, that I could not have afforded to live in this neighborhood. And I raised my kids there. We were able to go to a school we wanted to go to. And, they lived there for like a 10-year period. And I think that that is the story of saying, like, there are people who maybe they would like to own a property. Yes. But renting a property in this neighborhood is more affordable than coming up with a 20% or 30% down payment. And that's not in the cards for them at that moment, or they don't want to. Some people don't want to own a property. They don't want to have the maintenance.
They want to be mobile.
There are investment kind of gurus out there, like Ramit Sethi and people like that, who are always telling people, don't ever buy a house like that. They are actually saying that's a good financial thing to do. So for some people, they make a conscious choice either to say, I don't want to own, I just want to rent, and yet I still want to live in this neighborhood, or they can't afford to do that. They don't have the down payment, and yet their kids are school age and they want to live in that neighborhood. So the personal stories are really important to recognize that if somebody has a safe, decent, affordable place to live in a nice location and they get to rent it, I feel like renters get discounted some. Like, do renters not count? Like, they're 30 to 40% of the people who live in houses in the United States. Like, how come being able to rent a house is not a good priority too? Like, so I feel like sometimes we have to stand up for our customers themselves, because the people who own homes, who live in them, they kind of have the voting power. They're the ones who, like in my local town, for example, the people who yell at the city council members all the time are the retired homeowners, not the renters who actually like pay all the taxes. The renters, when they pay the landlord their rent, the landlord turns around and pays the taxes, which pay for the parks and which pay for the street sweepers. And so anyway, I feel like part of this conversation is not recognizing the value of renting a house and that person who's renting the house and their story. Like that's kind of tossed aside a little bit.
Yeah, you're pointing at the right thing. I mean, let's be clear. In most of the country, it is cheaper and more financially, the right answer to rent than own, and the gap can be wide. So you're absolutely right. And again, there are lots and we actually might be seeing a generational, right? Gen Z, millennials may pull the Ramit Sethi thing and just rent forever. I mean, that is a financial choice. But to your point, the ability to rent in a desirable area with a good school district for your kids in an environment where you could not buy there, that's a good thing. That's awesome that they have that ability to get into that good school district via renting a home. And there's nothing wrong with that. That should be encouraged. That's awesome.
Yeah, 100%. So if I had to put an argument together, I'm going to put a recipe together on the value that investors add to the community. First and foremost, we provide a service. We provide housing for people who want to rent instead of own. That's number one. I've also heard you say, number two, we recycle housing. We save housing, like housing that was in the dumps. It literally had a slumlord who was not taking care of it. It hadn't been maintained for the last 50 years. A responsible mom and pop investor can come in and turn that one around, invest their own money into it, their sweat, labor, and now you have a property that's back in good condition for somebody to live in. That's another benefit.
Amen.
I would add another one, which I think is really cool, which I'm kind of playing around with, is this idea of being a small developer, like
Yes.
a small and mighty developer, where most of the developers you hear about are the Ryan Holmes of the world and those kind of people. Okay, that's kind of the equivalent of the hedge funds who buy.
Yeah.
They do put a lot of inventory, but what I think is really cool is having these swarms of like small investors who go and they build an ADU in their backyard in California and they rent out that ADU, and that inventory was not even there before, and now they've taken their ingenuity and their entrepreneurship and they've saved up $150,000, and now they've added one house or one property to the housing market, and then you multiply that times millions of investors who are all building an ADU or cutting off a lot and building a new house or building a duplex on this little infill lot. Like that to me is pretty exciting because we're also helping with the supply issue of adding supply to the market.
Yeah. If I was asked at Resi Club, which was a New York event I was speaking at for my magic wand, and the answer was new supply. So you're onto something. I hope for the next decade we see more and more states, more and more communities incentivize ADU. Right? We're already seeing. Like I think Seattle was the first one to pop off. Now we have San Diego really going crazy, and I think we're going to see it more and more in the across the country where owners are incentivized to your point, create another unit. And that could be hundreds of thousands, millions of units created in a decade. And I hope that happens. It would be wonderful to see happen.
What do you see as some of the restrictions to that happening? So if somebody who's a city council member or a state representative, they're listening to this. I don't know if they're listening to this or not, but if they were, what would Michael Zuber tell them to help make that happen?
Well, I think the first thing you have to realize is it has to pencil. So what does that mean? So let's take San Diego, which is something I have recent experience with. In San Diego, California today, you can build for about $400 a square foot. But the value you're getting on the backside, like at refi time, is $800. So it basically says if you own one of these lots, you'd be silly not to build an ADU, right? That's what those numbers say. However, Fresno, California, where I am at, and I have been looking to build ADUs for a long time, it would cost me about $120 to $140 a foot, but I only get $80 of value. So I have to leave money in the deal. It doesn't make financial sense, which is probably okay because if you step back and you look at San Diego versus Fresno, what do you see? You have a huge problem in San Diego because you're not really building. There's not enough land. There's lots of land in Fresno, so you can still build other things. But eventually, as cities become more densely populated, less lots available, ADUs will make financial sense. So I think the answer has to be the numbers make sense. And you could do your own calculation, right? If I can build for 400 and the value is 600 to 800, go build as many as you can. But if it's like me and it's 140 and you only get 90, it's like, I guess I'm going to wait.
Yeah. And from a policy standpoint, actually making easy to use regulations that allow you to build an ADU, because that could change. Fresno 5 years from now could be, now the economics make sense. It's $200
Absolutely.
per square foot and it costs 120. And so from a policy standpoint, if you create the policy, then the market's going to go up and down, but all of a sudden you don't have to like spend the money as a local government. The market will spend the money. They'll go borrow it. They'll put their funds in there, but the regulations are the big issue. Like my local town, for example, allows ADUs, so good for them for doing that. But we have the issue of you can't rent out if I own a duplex or a house and I'm a landlord and I want to build an ADU behind there to add some extra supply. I'm in a single family zoning, so I'm not allowed. I don't have a rental license. So there's there's a kind of web of licensing and regulations, and if it's hard to build, if you can get through the building process, then there's the licensing regulation and all that. So
I've heard that, yeah.
So that's part of that is if you kind of demonize investors and make it so they're the problem, which is one reason I'm doing this episode, then you're not going to have regulations that allow small mom and pop investors to actually solve the problem of supply.
You've just got to ask yourself, what do you want the end product to be? Because show me the incentive, I'll show you the outcome.
Yep.
It's really that simple. If you want more units because your housing is unaffordable and crazy and there's no place to build, don't put on silly restrictions. Because it may be similar to yours. I've seen some that says, hey, if you own a rental, like a house in San Diego, for example, and then you build an ADU, you can't rent that ADU out because you're already renting the house out. The only way you can do it is if you are the owner occupied of the house, and then you could rent out the ADU, right? There's just all these kind of restrictions that really reduce how many you could build. And that seems silly. It seems short-sighted.
Yeah, we basically have single family deserts, which I
Yeah.
get, like the arguments like, hey, the character of the neighborhood, that kind of thing. But have you ever seen a really old neighborhood that has like single family, and then a little duplex, and then a
I
single
have.
family and a fourplex? Those are some of the most charming, high character neighborhoods I've ever seen. And they were built before the time when you had these like very rigid factory like zoning restrictions, like all single family over here, all duplexes over here. Like that,
Well, have you
actually
ever
having a
seen
mix, isn't it?
yeah, have you? I mean, you see these all the time, but just for the audience, right? So, if you ever go in and you find a community that was built 40 or 50 years ago,
Mm-hmm.
there's a very good chance that that's now a C-class area,
Mm-hmm.
right? Because all the people with the money, they're moving to the latest, greatest, and new stuff. And that's because of all the restrictive zoning. If you really want to incentivize investing in a community, go take some of those older lots, which, oh, by the way, are the bigger lots, and make them more useful, make them more economic. And you will see just a wave of cash invested in upgrading those communities.
Yeah, 100%. Well, Michael, I could keep talking about this all day long, but I want to give you the final word. Housing problems, are investors causing this? You've done a pretty good job of making the argument, but I want to let you have the final word, and then I'm going to tell people where they can hang out with you and connect with your channel.
Real estate investors are not causing the housing crisis. They are simply scapegoats for doom creators and crash bros who frankly don't own any real estate, and all they do is produce porn, fear porn. Don't follow them. You're only hurting yourself.
Love it. All right. The person you should be following is Michael Zuber. Michael, it's my honor every week I go on your channel so that you can check, y'all, if y'all want to hear a little bit more of me, you can go on the playlist on Michael's channel, but also just a wealth of information, awesome perspective, economic perspective. I follow your economic news and check into that. I'm going to put links to all this in the show notes and in the description, but where can people follow you, Michael, if they want to connect with you after the episode?
I've done very few things right in life, but one thing I did get right is everything I do is one rental at a time. I should be easy to find.
Yeah. All right. Look on YouTube, look on the podcast. He also has a school community and some other stuff going on that's really awesome. So Michael, thanks for your time. It's fun chatting with you.
Bye. Thanks again.
So in this episode, one of my favorite ideas for investors to make a positive impact on the community and to make a lot of money was the accessory dwelling unit, or ADU. But in this episode, we didn't talk about how to get started with ADUs or how to build them for yourself. So in my next episode, I interview ADU expert Derek Sherrill to give you a crash course on finding good ADU deals, navigating the zoning of your local town, and we even give you a free floor plan from Derek to build your own ADUs. If you're watching on YouTube, you can click on the thumbnails above me here, or if you're listening on the podcast or on YouTube, you can click on the link in the podcast or YouTube description below. Thanks for watching, and I'll see you in the next episode.